Is private lending safe? Well, it can be if done the right way. It could also be very dangerous if not done the right way. And in today's video, we're going to be talking about some of the ways to protect yourself if you are a private lender or if you're a real estate investor that works with private lenders. You got to be on the right side of the equation here. I'm here to let you know that private lenders have been the lifeblood of our success in real estate investing. My name is Dave Perichin. I have successfully been working with private lenders for over 14 years, and I've seen the good, the bad, and the ugly when it comes to private lending. Personally, I'm very proud to say that I have borrowed tens of millions of dollars from private lenders, paid everything back, work very closely with our private lenders. These are lifelong relationships, but some of the private lenders that I work with on the day-to-day have worked with some not so great operators, and I've seen some catastrophes. I've seen people lose millions of dollars, and I'm here to let you know it is absolutely terrible. You've got to do this thing the right way. So is private lending safe? It can be. It's also an investment. There's always risk to any investment, but there are some steps you can take to protect yourself as a private lender. And then as a real estate operator, you just need to be doing everything the right way. In this video, we're going to be talking about exactly how to do that. Okay, first and foremost, what is a private lender? If you're thinking about being a private lender, you got to put yourself in the shoes of a bank. You got to look at yourself as a bank. Just like a bank lends money on a house and somebody's going to buy the house and then make interest payments, that is you. You're the bank who's lending the money on the house, and then the operator, if it's a real estate investor, that's the person who's going to be fixing the house up more than likely, and they're going to refinance the property after it's fixed up to keep it as a rental property for themselves. When they refinance, they're going to pay you back, or they're going to sell the property as a fix and flip. They're going to use your money to borrow to buy the house and fix the house and then turn around and resell it for a profit. And when they sell the house, they're going to pay you back. But you got to think of yourself as the bank. You're going to be earning interest, right? So that's how this arrangement works. You're the lender, they're the borrower, and you are getting your money back plus interest. You're in this for the interest. We're not going to be talking about equity participation. We're not going to be talking about these fancy, structures and things like that. I don't even do that. I don't suggest you do that either. Keep it simple for yourself. Money goes out, money comes back in, and you get more than you put out. And that's the interest. That's your return on investment. I'm here to let you know the simplest way. Keep it simple, right? Keep it super simple. KISS, the simplest way to do this. And what I have seen is the most profitable way is one-off lending deals rather than investing in some type of fund where your money is pooled together with a bunch of other people. Everything I talk about and everything I teach is all based on one-off lending deals. I'm here to let you know the private lenders that I work with, I have these very successful relationships. Every one of them that got smoked in real estate was always involved in some type of fund or some type of syndication. I don't even teach that. I don't do that. I don't teach that. I only lend from one lender. I'm one borrower. The money is secured against one asset and one house, and everything is keeping it simple. And we pretty much just do single family houses. Maybe sometimes we do duplexes or a small apartment, but that's the bread and butter. I like single family houses, especially for you as a private lender, simply because it's the easiest to verify. It's the easiest to underwrite. Why do most private lenders lose? Why do most private lenders fail? It's because they trust without verifying. They don't get into the verification or what's called the underwriting. A bank like Chase Bank or PNC, they would never loan money on a mortgage without underwriting. They send an appraisal out there. I'm not saying you got to do appraisals and stuff like that, but you got to have a general idea on what you're lending against. And when it comes to single family houses, that's by far and wide the easiest thing to basically analyze. You could do a desktop analyzation. You can go on Zillow. You can go on Google Maps. You can walk up and down the street. And single family houses provide the ease here, so you know what you're lending against is actually standing, right? It's got four walls and a roof. Hopefully it's not that. Just, four walls and a roof. Hopefully it's an asset here. But you can get a general idea of the value of this asset, and single family houses is going to be the way to keep it simple, and we're going to talk about keeping it safe for you. Loan to value. You never want your loan to exceed 70% of the value of the property. So if the property is worth after repair value of this property is $200,000, what's 70% of $200,000? It's $150,000. You shouldn't be lending more than $150,000 on a $200,000 house. You need that cushion. It's got to be some equity in this thing. Never lend 100% of the value. The house is worth $200,000 and you're going to lend $200,000? That's a nightmare waiting to happen. Make sure the lower the loan to value for you, the better. That's how this works. Next up is you got to understand what the paperwork looks like and what the paperwork is a little bit. There are two main documents that you need to understand. The first one is a promissory note, and this just outlines the terms of the deal. Talks about who the borrower is, who the lender is, the address of the property, which is the collateral, the terms of the deal. That's the promissory note, signed by the borrower, not recorded against the house. The mortgage, the second document, also known as a deed of trust in places like Arizona, but this is the lien. This is very important. This is also signed by the borrower at the closing, and this is the lien that you are secured, recorded against this property, where if the terms of the promissory note are not fulfilled, you are able to exercise this mortgage and literally take the property back. Now, I'm going to actually share at the end of this video something that we do with our private lenders, which is basically the safest way you possibly could do this, and that's really what you should be doing. But I'm here to let you know the two main documents when you are lending is the promissory note, which spells out the terms of the deal signed by the borrower, and then the mortgage, which is recorded against the property, also signed by the borrower, and all of this is recorded. The mortgage is recorded at the close. Next up, make sure when you are lending money, you are not just wiring money to some random person's bank account. Every single real estate closing that you do and real estate transaction that you do and you're lending on, it's got to be closed at an attorney's office or more than likely a title company. Everything we do is at title companies. When you're wiring money, you need to make sure that the person on the other end of that wire is an actual institution that's handling this closing, and any business banker will do this for you. So make sure you verify the routing number and the account number of wherever you're sending this money, and that's really the process, right? You're going to kind of look at the deal with your borrower. Once it looks good, it's a safe LTV, you've done the Google Streets, you can kind of see what's going on with the valuation, you can kind of see that it's a decent looking street and whatnot, you've looked at the pictures from the borrower, you have a good game plan with the borrower. Well, once you agree to do this, everything needs to be closed at the title company. Typically, there's an attorney at the title company. They'll draft the note and the mortgage. You need to be reviewing this stuff before you send that money, but especially you need to review the routing number and the account number. This way you're not just willy-nilly sending your money away. There's so much fraud out there. It's disgusting. It's terrible, right? Make sure you're verifying the routing number and the account number, and you're verifying the two main documents, which is the promissory note and the mortgage, which is the promissory note. The promissory note is not recorded against the property. The mortgage is recorded against the property. So the way these mortgages work, there's always a senior lien, and that is always where you need to be. You need to be the first mortgage. Never lend in the second position. Never lend behind some other lien, right? I've seen private lenders get absolutely smoked lending in the second position. Don't even do it. Always make sure you are the first and only lien against this property. You are the senior lien. So there's nothing, you're not behind anybody. The senior lien has all the seniority here. So if something was to go wrong, the senior lien holder, which is going to be you with this first position mortgage, you have all the rights to the property. Never lend in second position behind any other lien. The question that every single private lender should be asking themselves is, hey, what happens if a deal goes bad? Well, I'm here to let you know. If you have to take a property back, it could be very cumbersome and very legal, and believe me, it's terrible. The judicial system is a nightmare. I'm foreclosing on 2 properties right now. I'm the lender on 2 properties right now, and they've been in courts for literally months. 6 months, 9 months, I don't even know how long at this point. It's just absolutely crazy. I have to actually hire a private investigator to hopefully find this borrower because they ditched out, So when you are lending, it could be very cumbersome to have to foreclose on the property. So what we do, and I suggest you do this, and this is the ultimate trust right here. This is the borrower trusting the lender, and the lender should be trusting the borrower. This is how you create the ultimate trust. Have your borrower sign at the closing, in addition to signing that promissory note in the mortgage, have them sign a deed over to you. Now this deed, which is the ownership rights of the property, it's not going to be recorded, but it's going to be sent to you. It's a signed and notarized deed. And this way, if something goes wrong or something happens to the borrower, God forbid, right, financially, or they dip out, or anything happens whatsoever, you don't need to go through the judicial process to take this property back, which is very cumbersome. You can just record the deed. This is the ultimate layer of trust for the borrower too, because technically you, the lender, could just steal this property. You can just literally march down to the county courthouse and record this deed, and you just took the property. No lender wants to do that though. Lenders want to be passive, and they want to create a long-term relationship with their borrower, just like the borrower wants to create a long-term relationship with the lender, right? But that's the ultimate layer of security and trust right there. So in addition to signing the promissory note and the mortgage, have the borrower sign a deed. It's not going to be recorded unless something happens to the borrower. If something happens to the borrower, you just record that thing. No attorneys needed. Attorneys take all the money out of these deals anyway. They're terrible too, right? There are some good ones, but they're expensive, as you probably know. So make sure when you are creating this agreement with the borrower, see if they'll sign a deed for you. And if you're the borrower, have a relationship with the lender. Sign the deed. Who cares? Nothing's going to go wrong. You're going to do a great job. We teach you to do things the right way around here, right? But it's that added layer of security for the lender. Keeps them sleeping good at night. It's going to keep you sleeping good. It's keeping you as the borrower, creating this long-term relationship with the lender, but have them sign a deed at the closing in addition to the promissory note and the mortgage. The deed is not going to be recorded unless something happens to the borrower. And the final thing is, and I know I've already said enough here, but just make sure you're investing with the right operator. There's an old saying at the racetrack, I don't gamble at racetracks, but invest in the right jockey, not necessarily the horse. Bet on the right jockey, not necessarily the right horse. So with that being said, make sure the person you're working with, feel free to run a background check on them. That's important, right? Anyone should be able to. If they're an honest person, they don't have anything to hide, run a background check on them. But just make sure you're working with an honest person. Make sure you're working with somebody with experience and somebody who has good integrity and morals, right? Always trust, but verify, and just make sure you're betting on the right jockeys. There's bad actors out there, right? So just be very careful where you're sending money, be very careful with who you're investing in, and be very careful with what you're investing in. But if you take some of the steps that we discussed in this video, you're going to be on the right side of the equation. This way you can do things the right way, make a lot of money. At the end of the day, let's all succeed together. That's what we're all about. So if you're interested in private lending, learning how to either raise private money or be a private lender, or you're a real estate investor and you just want to up your game when it comes to wholesaling and novations and raising private money, building a portfolio, bird deals, we do it all day long. Hop in the school community. There is a link down below, and we're in there every single day answering questions, helping you. We got all the scripts and the paperwork and everything that you need, and we do joint ventures with people in the school community. I love working with people. You can bring the deal. We'll help you through it. We can make money together. We love that opportunity. So thank you for being here. Make sure you hit the bell for notifications. Make sure you subscribe and do all the things. My name's Dave Parrish, and with the cream, I'll see you on the next video.